Hey traders, John Fortune here with this week's Weekly Forex Forecast for the 21st of October to the 25th of October 2019. As always, what we're going to do, we're going to start off by looking at the US dollar index and oil before running through a number of markets, looking at the key levels of support and resistance in the process. We're also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a fantastic weekend. Let's jump over to the charts and see who the money is this week. As always, we're going to start off by looking at the US dollar index. Now, just before we do that, I want to highlight some key events coming up for this week ahead. We do today have the UK Parliament voting on the withdrawal bill, and this is likely to lead to some gaps potentially starting on Monday in the pound and possibly even the euro. We do also have next week on Monday Canadian elections, and we also have on the Thursday the European ECB interest rate decision and press conference. So the markets may get quite volatile next week. This brings with it risk and opportunity, but just keep your risk sensible next week when trading these pairs, and also keep an eye out for these events as they unfold. So with that said, let's take a look at the US dollar index. Now, last week we were looking for further declines in this market, and we were looking down towards the target of the 97.91. We did take out this target set from last week, and we are looking for further declines in this market going into next week. What we'd like to see is if we can get a pullback, any pullback, but preferably if we can come back and test the key area of broken support, turning resistance at the 98.21. This will be the best place to start to look for further declines in this market, and we're going to be looking down towards the next key of support to the downside in the target set at the 96.58. This means that going into next week, as we're expecting further declines in this market and due to the big sell-off last week, we are going into next week with a bearish bias on the US dollar index. The next market that we're going to look at is crude oil. Now, last week we highlighted the 54.85 area to start to look for a bounce to the downside. We did come back and test this key area of broken support, turning resistance at the 54.85. For anybody not already looking to be short in this last week, if we can come back and retest this key area of broken support, turning resistance once again this week at the 54.85, this will once again be a great place to start to look for those bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key of support to the downside in the target set at the 50.54. And if we can get a breakthrough here, we're going to be looking down to the next key of support to the downside in the target 2 at the 49.11. The next market that we are going to look at is the euro dollar. Now, last week we were looking for further advances to the upside. We highlighted the 1.09930 for you as an area to start to look for a bounce to the upside, and we tagged this almost to the pip before rallying to the upside, taking out the target set from last week at the 1.11040. So I hope some of you made some nice profits off that move. Going into this week, we are looking for further advances to the upside. We're coming quite close to the target set. This was target 2 from last week at the 1.1199. If we can get a pullback, this will start to give us good risk to reward as we're coming close to this target. So if we can get a pullback, and any pullback in this area, but preferably if we can come back and retest broken resistance from the past, turning support at the 1.10630, this is going to be the best place next week to start to look for those bullish formations and patterns, as it would give us the best risk to reward. And we're going to be looking at initiating longs up towards the next key of resistance, the upside in the target set, the 1.1199. And if we can get a breakthrough here, we're going to be looking up towards the next key of resistance, the upside in target 2 at the 1.1249. So the next market we're going to look at is pound dollar. Now, last week we were looking further advances to the upside in pound dollar. We did get those moves to the upside. We did take out the target set from last week at the 1.2783 and also higher up at the 1.2967. This was a great move last week, and it was a very profitable trade, which we in fact highlighted for our members on Monday. Now, very simply put, going into this week, we are still looking for further advances to the upside in this pair. What we would like to see first, though, is we'd like to see a pullback, because we are coming close to this target. So in order to get good risk to reward on a trade, we'd like to see a pullback first, preferably if we can come back and retest broken resistance, turning support at the 1.2707. This is going to be the best place next week to start once again to look for those bullish formations and patterns. We're going to be looking at initiating longs up towards the next key of resistance, the upside in the target set, the 1.3022. And if we can get a breakthrough here, we're going to be looking up towards the next key of resistance to the upside and target 2, the 1.3179. So next market that we're going to look at is US dollar Japanese yen. Now last week, looking further advances to the upside, we are still structured to the upside, and we discussed this possibility of an inverted head and shoulders with a potential pullback down towards this area. We pretty much did nothing in the end, and we are still structured to the upside. So very simply put, overall what we're looking at, so not just next week, but overall in this market, we're going to be looking to see if we can get a pullback, as we said last week, towards the 106.96. And this will be an area, if we get this pullback, to start to look to see if we can get those bullish reversals to the upside, if we can turn around and start to get long setups in the US dollar Japanese yen. Just bear in mind, if we have a weak dollar next week, we will not go down and up all in 1 week. So we're looking at this as the likelihood, the move next week, of being just this correction down towards the 106.96 next week, if we have that weak dollar. And if we do get this pullback to the 106.96, this is something we can look at the week after or in following weeks to see if we start to get those bullish reversals and start to see if this is a place we can once again look for long positions in the US dollar Japanese yen. So next market that we're going to look at is Aussie dollar. Now last week we highlighted a key area of support in the Aussie dollar, the 0.6750, to look for a bounce to the upside. We did have a pullback to this area, and it was a really nice move last week. We bounced from this area, taking out the target set from last week at the 0.68370. Very simply put, going into this week, we're looking for further advances to the upside in this pair. If we can get a pullback this week towards broken resistance, looking to turn support at 0.68120, this is going to be a great place once again this week to start to look for bullish formations and patterns. We're going to be looking at initiating longs up towards the next key of resistance to the upside of the target set, the 0.6902. And if we can get a breakthrough here, we're going to be looking up towards the next key of resistance to the upside and target 2, the 0.6996. The next market that we're going to look at is New Zealand dollar. Now we start the week very close towards the target, like we do in a number of these markets. So what we'd like to see going into next week to get the good risk to reward on the positions that we're looking to take. If we can get a pullback, and as always, preferably if we can come back and retest broken resistance from the past, looking to turn support at the 0.63220. This is going to be a great place next week to start to look for those bullish formations and patterns. We're going to be looking at initiating longs up towards the next key of resistance to the upside of the target set, the 0.6404. And if we can get a breakthrough here, we're going to be looking up towards the next key of resistance to the upside and target 2, the 0.6450. The next market that we're going to look at is US dollar Swiss franc. Now we start the week below a key area of broken support from the past, looking to turn resistance at the 0.9904. If we can get a pullback, and if we can get a pullback and a retest of broken support turning resistance, this is going to be a fantastic place next week to start to look for those bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key area of support to the downside of the target set, the 0.9815. And if we can get a breakthrough here, as always, we're going to be looking down towards the next key area of support to the downside of the target 2, the 0.9717. The next market that we're going to look at is US dollar CAD. Now, just remember, we have on Monday Canadian elections, and this is likely to affect the US dollar CAD. We will go through the implications of this in the Monday session with members. But overall, we are structured to the downside in this market, and especially with a weaker dollar, we are looking for further declines to the downside. If we can get a pullback, and if we can get a pullback and a retest of broken support turning resistance in this market, this is going to be a great place to start to look for those bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set, the 1.3038. Now, if you're not already involved in the US dollar CAD from the past few weeks, you may want to actually wait for the elections to pass before getting involved with this, just to be on the safe side, especially if you are new to trading, to avoid any whipsawing or volatility in this market. And last but not least, we have gold. Now, structurally, we are looking at this for a pullback, as we discussed last week, towards the 1517.30, as it is still technically structured to the downside, and we'll be looking for structurally further declines to the downside towards the 1453.00. You will notice, however, that gold here is paired with the dollar, and so any declines in gold would be against the dollar. If we are looking next week at having a weaker dollar once again, you may see gold just remain in a very choppy corrective zone like we've been seeing over the last week. So two ways that we'll be looking to play this. First of all, if we are looking further declines in the US dollar next week, we can skip this market altogether on the grounds that there is a risk that this could just be very choppy. Or the second way we'd like to use this chart going into next week is that if we fail to get that weakness in the US dollar and we start to, for whatever reason, see a strengthening in the dollar, there is a market here where we can play this in the other direction and we can play that dollar strength with gold to the downside. So we can use this as a plan B currency if we fail to get that weakness in the dollar next week. Or again, if you're looking only for dollar short positions next week, you can completely skip this and just wait out this choppy correction until we get further directional moves in this market. So that is it from me for this week, guys. As always, I hope you enjoyed this video. If you did, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to all of you who have subscribed to the channel so far. I want to remind you all of the events that we have going on, which are likely to affect the markets next week. I also want to wish you all a fantastic weekend going into next week. And the only thing left for me to say, guys, is take care and don't forget to trade safely.